Hello and welcome to ETBFSI.com. My name is Amol Dethe, and welcome to this special series on the ETBFSI Digital Banking Dialogue. And I have with me Mr. Nitin Chugh, the MD and CEO of Ujjivan Small Finance Bank. Mr. Chugh, welcome to this discussion.
Thank you, Amar.
And my next speaker is Mr. Riddhi Datta, the Regional Head Asian from Backbase. Mr. Datta, welcome to this show.
Thanks, Amol. Thanks for having me.
So glad to have both of you here. And to begin with, Mr. Chug, I will come to you. And obviously, digital has merged with banking, today, and digital without digital banking sector cannot survive. But if I ask you just specifically to get a sense from the digital banking from you, what are some of the digital banking essentials that every bank should look at right now? Because what we see is that being a small finance bank and being a modern bank, you have a great benefit of adopting the advanced technologies. But the traditional banks are still in a dilemma of what kind of technology they should adopt and how they should go ahead. So the viewers, the banking professionals, I think would be really happy to have your perspective on what kind of essentials that the bank should look at when they are going to adopt digital banking.
Well, Amol, I don't think there are a predefined set of essentials. I can tell you more from experience. So I think the first thing is to have a roadmap for the next 3 years, 5 years, minimum of 3 years, because you need to prepare yourself. You need to have a roadmap that can lead you to a certain direction. The second important thing is to also have milestones, so that people are very clearly aligned to certain set of projects which are going to deliver those outcomes, and then you can keep revisiting your plan, every now and then, maybe once in 6 months, to just to be sure that you're on track. But I think what is most essential is the whole culture in the organization, the mindset, the people skills, and finally the technology partners. And every organization, every bank would be at a different stage in their life cycle. Some of them would be rediscovering themselves, some of them would be repurposing themselves, and some of them would be in a scale up phase, like the way we are. And some of them might just be on the cusp of redefining the user experience, okay, because they've been dealing with their users for a very long time, and now they really do want to define the user experience altogether differently. So depending on where every bank is, I think it's important to lay out a roadmap which is going to be useful enough to chart the whole journey in a manner that you can deliver to the outcomes that you have, whichever way you expect them to do, and then have the right kind of org structure in place. And at least in my experience, I've seen that digital works best as a horizontal rather than as a vertical, because you can end up otherwise creating capabilities which are very siloed, and the rest of the organization and the entire customer base may not even benefit from that, right? And like we've spoken in the past also, I think it's equally important to have like-minded partners, like-minded tech partners, like-minded fintech partners, who will help you in building those capabilities and also helping you take that to the consumers. One thing that I have learned from my interactions with Backbase in the past, for example, is that if you take a inside out view, then you will always look at what do you want to prioritize first. Do you want to prioritize revenues? Do you want to prioritize your customer service? Do you want to prioritize market share, etc.? But you take an outside in view, then you will look at customer experience, customer journeys. You will look at frictionless journeys or whatever else. So I think there are many ways of looking at the same thing, but it completely depends on where each and every bank is at in their own life stage, and then on that basis decide as to where you want to go in the next 3 to 5 years.
Okay, I think valid points, Mr. Chog, and obviously prioritizing, it's not only for the digital, but overall, it's a very, very important aspect, that you mentioned. Let me bring Mr. Datta here, and Mr. Datta, could you tell me, as we see, each and every bank or the financial institutions is adopting digital, aggressively, and but at the same time, technology is also evolving rapidly. Could you tell me to what extent do banks need to revisit their banking strategies, specifically the digital banking strategies?
Amol, if you have heard, what Nitin just said, that different banks have different priorities. Some are are scaling up, like Ujjivan. Some are rediscovering what their priorities are. Some are redefining their user experience journeys, let's say. So there is no one single crystal ball in which you can look at and say that this is what banks need to do to revisit their digital banking strategies. It all depends on from a bank to bank perspective, depending on what their priorities are. But if I talk about a couple of trends that we have observed in the market, and I spoke about it last year when we came out with our fintech and digital banking 2025 report along with IDC, and we are launching our second edition this year. So, couple of data points that we have gathered there is one, 7 out of 10 tier 1 and tier 2 banks in India, which is almost like 70%, they're aiming for a lot of more frictionless and contactless banking experience. Now, that would be in when they're trying to onboard customers, when they are trying to do customer verification, authentication. So that is one trend that we have picked up. The second trend that we've also picked up as a part of the same report is that we expect, as a part of that research, that we expect to see almost 75% improvement in turnaround time of high impact business processes. And high impact business processes are around payments, which caters to a large extent of what customers do online. So if you look at these two trends, the question that then comes is, how do you as a bank look to continuously keep up to your customers' expectations and ensure that they're always happy? So that also means that there is, to some extent, some revisit that needs to happen on the digital banking strategy. Again, there is no one clear answer. All depends on what the priorities and what the ambitions of a bank is. But if I again go back to one point, and this is my last point on this answer, if I go back to what Nitin said, digital banking has to be a horizontal play. It cannot be vertical. And that is the most important strategy that one needs to keep in mind when they're embarking on a digital transformation. As long as you understand that this is a horizontal platform play, everything else will follow suit from there.
So thank you, Mr. Datta. And Mr. Chuk, that you mentioned about the priorities. So let me get some more answers from you on the same topic. So how can banks prioritize their digital banking strategy in terms of revenues, customer experience, and partnerships? Because ultimately your priority should be in a horizontal perspective. At one side you have to provide a customer experience, at the other side you have to also see that whether you are getting a sufficient revenue, and ultimately the benefiting from the partnerships as well.
So it's not very complicated, Amol. The first thing we need to understand is that digital by itself is not the strategy of a bank. Digital
Right.
is a means to an end, right? It's an enabler. And therefore, the bank first needs to be very clear about, and I'm sure all the banks are very clear about where they're going and what their long term strategy is. And based on that, you will have a certain aspiration to occupy market share. You will have an aspiration for your customers. You will have an aspiration for what kind of businesses you want to be in, and then of course you will have aspirations around revenue, costs, etc., right? And customer experience of course is the overarching kind of a theme. So when you have to prioritize elements of digital, I think the first thing to do is to take a step back and say whether it is aligned to my overall business strategy itself or not. Now if you're trying to do something as a business and digital is not aligned to that, it's actually pointing in a very different direction, then what is the whole idea? Okay, it doesn't make sense, because then you'll end up two different narratives for yourself, and you will have a problem later on trying to make sense of both. So the first thing is to make sure that digital is aligned to the strategy of the bank. Once that is there, which I'm sure is there with all the banks, then it is not very difficult to prioritize, and different projects get prioritized on a different basis. Some projects will get obviously prioritized only from a customer experience point of view. Some projects will get identified and defined and get prioritized from a revenue point of view, some from a user journey point of view, which will again lead to customer experience, or some even from a cost optimization point of view, some from a turnaround time point of view, some from just purely reducing the friction and therefore enhancing the customer experience, or some for even increasing distribution. So if you are in a life stage where you want to expand your distribution, then it makes perfect sense to prioritize that over something else which you don't have enough of a base for. For example, if you look at a small bank like ours, or a new bank like ours, we are not small by customer base, but we are a new bank. We are trying to do, our whole strategy is planned around a manner that we need to grow our business. We need to grow certain businesses which are new to us. Now, therefore, digital has to be aligned to that. Digital has to enable that. And we cannot delay prioritizing customer experience just because we need to grow. So customer experience for us becomes overarching, and everything else that you do to grow the business, whether through partnerships or tech workflows or process automation or robotic automation, everything else starts to fold in there, because the larger priority is that you need to grow a certain set of businesses. All right. But if you look at a more mature bank, which is already serving a lot of customers, and there the whole narrative is to enhance the user experience and not so much on customer acquisition or growing the existing line of businesses. All right. Then the whole priority will be very different. Then you will continue looking at each and every workflow time and again, and reversioning them to make sure that you're coming out with even better customer experience at all points in time. And of course, there will be banks which will have the need to keep optimizing revenues, keep optimizing cost, keep enhancing revenue, so they can take a call on that basis. So again, I think prioritization is really contextual rather than a one size fit all.
Okay, I think a detailed one, Mr. Chugan, a very meaningful one. Mr. Datta, let me ask you this. Could you tell me what goes behind the execution of digital banking? I mean, you have a strategy of the bank, they prioritize stuff like Mr. Chug said, but what goes behind the execution of digital banking?
I'll answer it in a few ways, Amol.
Mhm.
So, when you talk about what goes behind an execution, the first thing, again, I think Nitin mentioned some time back, is to have that roadmap, right? 3 years at least, if not 5 years. And I'll give you an example of a bank that works with Backbase, not essentially in India, but in Asia, a pretty large bank called as Bank of the Philippine Islands in the Philippines. Now, they had a strategy back in 2016 that they want to go in for a platform play. But and this entire strategy was coming from the fact that, and this is I'm quoting their chief digital officer, that no one has a crystal ball to predict what products or services that you would need to build in the future to sustain your business or to keep with your competition. What we would be doing, and this is back in 2016, is to build the foundation capabilities, that we will keep the foundation ready, and this foundation will allow us to react in any manner that is required, react quickly regardless of what happened. And they are seeing the fruits of that in 2020 and 21 because of COVID. More things moving virtual, branch transactions going down. Bank of the Philippine Islands, they have seen from a customer base of almost 2.5 million customers online using digital channels go up to almost 4.5 million. That's almost double. And because of the fact that they were able to establish a foundation layer 3-4 years back, the scalability aspect was very well taken care of. So I think the first and foremost thing that one needs to keep in mind is that please look at the roadmap, please invest for the future, and don't look at a very short-term myopic point of view. That is one. And the second thing, when it comes in terms of how do you execute a digital strategy, and there also something again Nitin mentioned, and it's obvious that given Nitin's background, he has a lot of understanding about the nuances of this. He mentioned about these silos or the outside in versus inside out, and this is very important when it comes down to both the strategy and the execution. Now, can you cut off the silos? Can you really look at a larger holistic picture? Can you look at a customer first? That is where the outside in picture comes in. That what does the customer want, and accordingly you figure out as a bank what do you need to do, rather than clearly saying that I have these different lines of products and I need to go and sell it to the customers. So can you cut off the silos? Can you start looking at customers first? Can you start looking at a larger ecosystem and a partnership play? That I don't want to have a legacy view of the value chain. I don't want to own and control everything. Rather, I would cooperate with fintechs, with neobanks, with challenger banks, and let us survive all together and give the best experience and best offering to a customer. And the fourth thing is, can I, as a part of the strategy, can I offer an experience which is hyper personalized? I don't want to, as a bank, I would not want to offer an experience which is like a cookie cutter, which is like one size fits all. Different types of customers have different needs, have different ways of what they are doing in terms of the interaction with the bank. Can I look at that, and accordingly, can the experience of the customer be made to be tailored for that particular customer? So if you talk about a strategy and the execution, first thing, just to summarize, is to have that roadmap, have the vision, invest in foundations, invest in platforms, and then look at these three or four things, which is how do you cut off silos, how do you keep the customer at the center, how do you look at ecosystem and partnership, and how do you look at a hyper personalized experience?
Important questions, Mr. Datta. In fact, I should have asked you this question. I will certainly, repeat the same questions to you. How the bank should look at hyper, personalization, and how should they cut the silos. But on the silos front, I have a very important question to you, Mr. Chug. I have been talking to a lot of CTOs, CXOs, and obviously the CEOs who are talking about customer experience. But in reality, there are still, when we go to a branch, okay, I mean, ideally we don't go, but just for the understanding or just to see what is happening when we go or when we speak to the call centers of the bank, we still see the silos. And not to give you an example, but just to share a recent instance that one of my friend went to a largest private bank, and he asked for a home loan closure, and they says, okay, write a mail, we'll get back to you in 16 days, something like this. So my question to you is, at one side, when the customer acquisition has become so easy and seamless. On the other side, servicing the customer has become really difficult for the banks. So how digital is actually benefiting banks in terms of providing a greater service to the customers?
See, digital cannot solve this problem, Amol.
Hmm.
if you have an issue in terms of your own org structure, in
Okay.
terms of alignment of people to basics of customer service, or the fact that everybody needs to stand up for the customer and take ownership for whatever request that the customer comes up with or whatever the requirements are, I doubt if any technology or any digital solutions can solve that problem. So let's not mix up digital along with customer service. If you don't have an ethos of customer service, then whether digital or no digital, that problem is not going to get solved. But what technology can really do, and what digital can really do, is to help shorten that whole process, help make that interaction very meaningful, help the bank get very deep insights about customers, because what you don't have on your own as a capability, let's say you want to partner with a fintech because you don't have that capability and you admit to that, saying that I don't have that, and let me not act funny about this. I know what I'm capable of, so let me go and partner with somebody who can bring me this capability, right? So you will do that. But at the minimum, what the bank can do is to at least have insights on its own customers through interactions which are structured and unstructured. That doesn't cost a lot of money. It just requires a mindset to say that I will capture my interactions, I will analyze them, I will make sure that the system of interactions and system of records eventually become systems of engagement, and I will try and keep perfecting that in a manner that I will make better use of technology to keep sharpening my interaction and keep improving the experience for the customer. But that also requires a very hard look at existing processes. So part of the role that CDOs have to play, or the whole organization has to play, or CEOs have to play, is to also make sure that you keep challenging existing workflows. Why does it have to take 16 days for somebody to respond?
Exactly.
Why cannot be, so you start zero-based thinking. You start looking at, okay, if I have to turn around this whole request instantly, then what am I required to do? Do I require technology? Maybe yes. But do I require a change in the mindset? Probably a much bigger yes, right? A more emphatic yes. So those are the questions that have to be asked, rather than worrying about silos or no silos. And I don't think it's a problem of silos, quite honestly. It is really about whether you're aligned, the mindset of delivering to better customer experience, or is it only lip service?
Okay, very interesting perspective, Mr. Chuk. So, Mr. Datta, you mentioned about, silos need to be avoided and how we can cut the silos is an important factor. I'm sure you must be talking to a lot of financial institutions. So, could you tell me what is your learning, when you actually offer a technology, when you speak to the CXOs of the banks, what is the major learning that you in terms of the challenges they face, in cutting down the silos, in offering the hyper personalization? Because, if we look at the PSBs, specifically the government banks, forget one branch connecting to other branch. Sometimes the people working in the same branch doesn't know what A is doing and what B is doing.
Yeah, in fact, Amol, very pertinent question, and I wouldn't restrict it to only PSBs.
Right.
With no offense meant, even a large number of our flagship private sector banks have not been able to cut off silos. And as Nitin mentioned, it's very internal. It's in the mindset, and it's a process question that we are asking rather than and technology cannot solve a mental conditioning problem, because if a bank is willing to look at, as I said, I keep on talking about platforms because that is what we sell and that is what we believe in. And again, let's move out of banking for a while. We are using Netflix, we are using Amazon, we are using Zomato and Uber Eats, and all these guys have invested in platforms. And because they have been able to invest in platforms, they know what the consumer is asking for. They know what we use Zomato, right? Or we use Uber, and we know based on a certain behavior, they can predict, or they can offer us a little bit of more contextual offering from their side. So this is a process or a mental thing that can my, let's say, my retail banking business and my transaction banking business work on the same platform, so that if there is a customer who's engaging with me on both ends, can I have a consolidated view of the customer? Similarly, on the retail banking side, a customer who has called up the call center, as you mentioned, let's say to close a loan, can the branch employee or can the online channel also have the same context? They know that this particular customer is trying to close off a loan. So this is more about an internal process. And that is where I've seen a lot of banks unfortunately falter, where they're looking at technology, as Nitin mentioned, being that silver spoon which will come in and say that you're going to change everything. That's not going to happen. Technology can only facilitate, but for that we need that thinking, or that thinking to be forward looking, or the process to be changed. Second thing, as you mentioned, one is cutting of silos. You mentioned about hyper personalization. Again, it's a similar thing. I've seen a lot of banks, again, unfortunately, look at a very short term, as I said, myopic point of view, that in the next 6 months, I want these X amount of features that I need to roll out in the market. are you going back and checking in your last 6 months or your last 12 months that out of these features that you're asking, how many of them are actually being used? I'll give you a very interesting example. Another bank in Asia, not in India, it is the largest bank in that country. They were looking at revamping their digital transformation, okay, or their digital roadmap platform, and they came to us initially saying, "I have these 70 features, 70, that I have on my current app. I want it in the new app." We said that's not how you do transformation. Let's do some homework. And when we did that homework, we realized that out of those 70 features, there are six, okay, so less than 10%, six features which are accounting for 96% of their transaction volumes today. That means the remaining 64 features are accounting for 6%. So finally, the bank was also able to see the value that, that those 64 features are not adding anything to their, business or their revenue or their, cross-sell upsell. So what they said, okay, let's focus on those six features. Let's try to figure out how do we make those particular six features in a much more better and intuitive and customer friendly manner. So my point here is, Amol, that as Nitin mentioned, technology can only enable. But if the bank is open to ask those questions internally, that what is this transformation all about? Is it just about giving a new face to what I'm doing today? Then unfortunately, that's not transformation, right? So these are the challenges we face. These are the challenges we keep on hearing, and we try to educate banks and our partner institutions. But yeah, broadly, this is what, when we're talking about cutting off silos, when you're talking about hyper personalization, when we're talking about keeping customers at the center, all of these very fancy but very simple things. But unfortunately, not all banks look at them in the same way that we do.
Right. I think thanks for that note, Mr. Datta. And Mr. Chuk, the platform banking has been again a very important buzzword in the banking industry. How do we see platform banking shaping up, and what kind of partnerships you are having with different platforms at Ujjivan?
See, anything which is networked, anything which requires participation by multiple entities, and customers are also part of the same network, by default, that starts to take the shape of a platform. So when you try and forcibly call it a platform, yes, it's a good way to say that, yeah, we are moving towards platformification of services, but we should start by realizing that there are certain services which are already on a platform, and they would not have been possible, at least banking would not have been possible unless it was already on a platform, whether it was clearing services or even something as recent as UPI, right? So they're all already working on platforms. Now, the thing is that we have to develop more and more capabilities on these platforms. Okay. And within
Right.
that larger platform, you create sub platforms, and on the sub platforms, you have more of a COG, you have limited number of partners, and then you start sharing and consuming the same set of services, right? So that's also fine. So you can imagine it like a large tree. The large tree is a mother platform, and then you branch it out into, sub platforms, and then sub platforms become more like COG, and they have a limited number of participants. But at the end of it, the consumer has to benefit if it is meant for the consumer. If it is not meant for the consumer, which I would imagine in banking, there are very few such platforms which are not in the end benefiting or impacting the consumer, then those are mostly to do with knowledge sharing or information sharing, which are also fine. But I think as we are moving towards more open banking, as we are moving towards more participation, as we are moving towards more consent-led information sharing, and the users are becoming more and more aware of their rights and privileges around their own data, it is a given that platform banking or platform led services is going to open up and explode in the future. And that is where I think India as a country has done a remarkable job in terms of really moving ahead by creating those platform capabilities at scale, at a country scale, which is not available in so many other countries, or probably not in any other country. So I think we do have a great future in terms of platformized services in banking. And this will only help in better financial inclusion. This will also help in better participation. It will help in better diversification and making services available to everybody, rather than, concentration of the best services for the high net worth customers and everybody else left to the whims and fancies of, individual interactions. So hopefully enough, we will also democratize the kind of services that we offer to everybody. And
Right.
that is what we are at a stage. We are very clearly of the our purpose really is to serve the unserved and the underserved, because we believe they haven't been served very well. We also know that we need to serve customers who are not as affluent as high net worth or even the middle class. They have small borrowings and small deposits. Therefore, it's important for us to serve them in a meaningful manner, we want to give them the experience that a high net worth customer would ideally get. I am not saying practically gets or doesn't get, but ideally is supposed to get from a large bank or a wealth bank. But we want to do it in a meaningful manner, and therefore, because we are dealing with smaller borrowers and smaller depositors, we have to do it in a very cost effective manner.
Hmm.
Otherwise, our cost structures will slow us down. Now, because we have to do it in a cost effective manner, we have no option but to look at digital as a means of serving. And therefore, we have no option, and we are in a happy situation, so we are not doing this out of compulsion, but we are very happy that because we are on that journey and we are aligned to that sort of a purpose, platformized base of servicing and partnerships makes perfect sense to us. So we are not doing this out of any other compulsion. We are not doing this out of making a fashion statement that, yeah, I also work with fintechs. We are doing this because we are very meaningfully aligned to a certain set of customers. We believe we will take a long time if we do it ourselves. Best to partner with somebody, help us and optimize our tech investments and digital investments, and move rather quickly as compared to what we would have done on our own.
Oh, very interesting. Mr. Datta, what is your sense on the platform banking? I mean, Mr. Chuk is very clear, and he has realized, or he has put it very nicely that okay, certain things we cannot do, so we partner with the fintechs on that front because we don't want to do those things. There are many banks that are also partnering with different platforms. In fact, I was talking to one CDO, and he said that okay, my agenda is to give a Netflix-like experience to my banking customers, right? So it's a very interesting word. So how do you see, bankers adopting different platforms?
This statement that you mentioned, Netflix like experience. A few years back, I was hearing Amazon like experience. Now we hear Netflix. But I think the important point, Amol, is, as I mentioned some time back, is all these players, Netflix, Amazon, the commonality is the platform story there. They are all customer experience platforms, because end of the day, these are customer facing channels, and they have all invested in platforms in different shape and forms. Now, when you come to the importance of platforms and how do you work with fintechs and other players, that is where, if you remember, sometime back I mentioned, a lot of banks still have a very legacy view of the value chain, and this is quite unfortunate. And this is true for especially the large banks, the more established ones, where they don't want to get rid of the fact that they could possibly do everything, and that is where probably they falter as well. And some of the slightly newer, I wouldn't say smaller, newer banks like Ujjivan, for example, have a definite advantage there, that they don't have that legacy. And because of the lack of legacy, they can look at things in a much more innovative way. They can look at things as where you can complement each other rather than competing with each other. So fintech is one example. Fintech is just one example. The other example is, and we keep on talking about neobanks and challenger banks, another buzzword in the industry. A lot of people ask me, are these competition for traditional banks? But my answer is, whether you look at fintechs, whether you look at neobanks, challenger banks, these should not be looked as competition. You should always look at them as complementary, offerings which large banks can bring it into their ecosystem and then offer a consistent, unified offering to their end customer. And you look at all these fintechs or challenger banks, they're trying to solve one particular pain problem. They're not a bank. They're not trying to offer 10 or 15 different things. Somebody is trying to say, I'm trying to solve an invoicing problem. That's it. I don't do anything else. Somebody is saying, I just want to solve a travel card problem or a prepaid card problem. Now, if there is somebody who is excelling at that, why would you rather not latch on to their services, bring them into the ecosystem through your platform services, and then consolidate that to give it to an end customer, rather than trying to say, I want to build that invoicing capability on my own, spend 8 months, 12 months, some millions of dollars, and then come out with something which is probably at par, but probably not beyond what this other guy has already developed. So again, I think the more and more you talk, and the more and more I also talk to bankers, people like Nitin, CDOs also, CIOs also to an extent, I realize more and more that technology always can facilitate what the thinking of the bank is. If the thinking is not in the right direction, the technology will also not, you'll again end up spending money, but will you reach where you want to reach? The answer is no.
Great, Mr. Datta. Let me, shoot one more question to both of you. And, this question is actually getting a lot of attraction from the industry. This question is specifically about the neobank. So we had scheduled bank, commercial banks, then the traditional banks, PSU banks, private banks, we call it foreign banks, then even small finance banks, payment banks, and suddenly now there is whole focus on the neobanks. And, on the other side, a lot of investors are also ready to pump in a lot of money, into the neobank startups. So Mr. Chuk, tell me, how do you see the proposition of neobanks? Do you look at them as a partners, or do you look at them as a different entity altogether, which will become a separate bank going ahead? Though RBI has kept quiet and they have not, issued any certain regulations on that front. But how do you see this proposition of neobanks?
So I think we should talk only in the context of India, because ours is a very different context, because they are neither here nor there. If I put it very bluntly. So we can't be comparing ourselves to neobanks of Europe, or Australia or Hong Kong, Singapore, where you have actually licensed entities who are functioning like full-fledged banks, right, without branches. So I think in India, it's a good thing that we've started off with quite a few of these fintechs, aspiring to be neobanks, and we are already calling them neobanks for the kind of services that they're offering. And the way it's working right now is completely through partnerships. But I think nobody would have stepped into this whole area thinking that I only want to be a partner to a traditional bank or another bank, right? Everybody who aspires to be a new bank eventually wants to be a full-fledged bank, right? So hopefully enough in future, RBI will come up with regulations around that. If and when that happens, I'm sure these banks would be very happy to convert themselves into a full-service digital bank with a banking license, right? Now, till we get there, I think this whole partnership ecosystem is wonderful. We also are trying to work with one neobank at least that I know of, and I'm aware there are at least more than half a dozen neobanks which are already there. Most of them are in Bangalore, and each one, like Riddhi said, is trying to solve a problem. Each one is trying to build capabilities around a certain customer set or a certain set of services. So I think we should use this time to learn all of this, and who knows that tomorrow when RBI actually allows licenses like these, even existing banks can spin off a new bank of them, of their own, right? So I think there is going to be a time and place for a full-fledged neobank in the future. And till such time that we get there, it's best to partner, it's best to learn, it's best to understand the nuances, both on the tech side as well as on the user behavior side, because that is the knowledge that banks have, right? And everybody can benefit from that. Build capabilities, stay invested in that, and as and when this whole thing opens up, then make up your mind whether you want to take track A or you want to take track B.
Okay, I think very, very meaningful, Mr. Choga, and your comment about how they should build capabilities is very, very important. Because Mr. Datta, and I would like to have your tech perspective here. And let me give an example of a Australian bank called Shinja. It started with a big bank, and I could see that at Cyboss or even Singapore FinTech Festival, the leaders and of that Shinja bank were like a keynote speakers, and everywhere, the Shinja was the front story that how Australia created a new bank. 3 years down the line, the bank is nowhere. Now they blamed it to COVID-19, but the literally bank is nowhere, and they were really proud of their technologies and everything. So, Mr. Datta, if you could explain on the tech perspective, what goes wrong? Because they focused more on the technology and not on the capabilities which Mr. Chuk spoke about, or they, just went really, haywires in terms of expanding. And what is the lesson that the Indian neobanks can learn out of it?
So I'll answer your question, Amon, and a very pertinent question. I mean, we have heard about Shinja, we have heard about 86-400 again in Australia. A lot of these very fascinating stories not having the end that they wanted to have. But that does not mean that that is the normal trend. I think again, if I go back to our the fintech and digital banking report 2025 between Backbase and IDC, a very interesting observation that we heard, and I think Nitin just mentioned about it, is that we have found there is that 6 out of 10 banks, and this is not just India, this is a broader Asia, almost 60% of banks are looking at spinning off a digital only identity in the next 3 to 4 years, right? So why I wanted to highlight is that while we have seen in the last 5-6 years a lot of startups launching them as neobank, more and more we might see more established banks spinning off and launching digital only avatars. Now, coming to your question, what went wrong with some of them? Probably why is a Revolut or an N26 more successful, and let's say a Shinja is not that successful? And if you look at what do these banks do better, the most successful ones, I think there are three answers to it. And again, technology is an common denominator, but not the main thing. The first thing is that these banks have a much greater operational efficiency in the way they execute the business. Okay, whether it's looking at customers, whether it's looking at pain points or problem statements, whether it's looking at what their minimum viable product should be, not going all in, starting small and growing big. So they have a much greater operational efficiency in the way they operate. Second thing, as I think I've spoken about it enough, so I'll not go into details, but all these neobanks, and if you look at the experience that they offer, is not only enriched but very, very personalized. So I think we've spoken about it. But the third thing, which we have not touched upon so far, at least I have not touched upon, is the agility that these neobanks are bringing to the table, the most successful ones. And agility is not only about how quickly can you launch something in the market for the first time. Agility is about how do you really digitize these operations and operate these as an agile train, where every release cycle, and the release cycle cannot be 6 months, obviously. The release cycle is a fortnight or a month. You start launching new features, you keep updating yourself, you keep upgrading yourself. And these are the three things we have seen the most successful neobanks or challenger banks do better than the incumbents, or even than some of the more unsuccessful ones. So, if I have to answer your question, these are the three things that banks need to really focus on. That what is your overall operational efficiency, your personalized and enriched customer experience, and very importantly, the agility. And when you're talking about agility, the ecosystem, the partnership, the open banking, reducing the time to market, everything comes into picture. It's a much more holistic view. So yeah, that's just my point of view on that, Amol.
Yeah, thanks, Mr. Datta, and I must say valid points. Thank you so much for adding that perspective, and thank you so much, Mr. Chuk, for sharing great insights here. Thank you, both of you, and I'm really glad that I could manage to interact with both of you and get some perspective for our readers and viewers. Thank you so much, gentlemen.